FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and it is 12/12/19, a good numerological date for sure. Hey, are we going to have a fourth quarter rise in metals prices leading through the first quarter, through the end of February? Good question. We'll find out soon. What do you think? Email us with your answer to that question, kl@kerrylutz.com. Well, person you're about to hear from, been on the show for years now, had an incredible track record predicting, forecasting the price of metals and other commodities and other markets as well. Talking about Eric Hadik, Inside Track. That's inside with 2 eyes, track.com. Eric, welcome back. So let's get down to it. Stock market has been hitting new highs. It's not up dramatically over the past year, but it is up. Is it going to continue?
I think that on the whole, the market's going to continue to edge higher into first or second quarter of next year. But I do think we're going to see a couple of decent sell-offs in the middle of that, kind of what we've seen for the last 2 years, where you get a sharp sell-off for a few weeks and then the market kind of settles down, investors lick their wounds, and then start moving back up towards the highs. I think that pattern's still going to carry over into next year. But there are a couple of broader, longer-term indicators that I use that are starting to flash some warning signs. So I'm certainly starting to be more on the lookout for corroborating signals of a more significant top.
Yeah, so we found out yesterday the Fed is keeping rates at their current place indefinitely. They call it a long pause. I'll believe all that when I see it. Their policy rate is somewhere between 1.5% to 1.75%. But we saw a lot of interest in the repo market since September. It seems to have imploded. Reasons for that are varied. Where do you think rates are heading?
Well, I rely on my analysis of the bond and treasury note futures to give me some guidance, at least to what traders' expectations will be. And, the market really moves on those expectations. So whether any rate movement happens doesn't matter as much as the perception swinging back and forth. And my work has continued to show that in bonds and notes, which trade inverse to the actual interest rates, that we would see a drop from September into November. It actually is mirroring what was seen in 2018. And then from a low in early November when quite a few weekly and monthly cycles came together, as well as some other timing indicators, bonds and notes completed what would be a textbook ABC correction where they declined in the beginning of September, rebounded into early October, and then declined for the same magnitude, same price move as the first decline. That's just a very, very characteristic of a corrective wave, something that is waiting to then yield to a new advance after that. So there were many factors come into play in that early November timeframe that told me to look for bonds and notes to start bottoming and steadily work upwards into 2020. And for a couple of years now, I've been talking about some longer term cycles in bonds and notes that point to the middle of the year of 2020, June and July, as the most likely time for the next significant top. So putting that in the context of interest rate expectations, that would tell me that sometime between now and second quarter of next year, you're going to start to see the mentality shift towards lower rates. That, okay, maybe the Fed's going to need to lower rates, or something on the inflationary or the dollar standpoint, or even stock market standpoint is going to reinforce that idea that rates should edge a little bit lower. But I think that's going to be a very significant top in the bond market in June or July of next year. And so then that would subsequently yield to the opposite perception that rates start heading higher from that point forward.
All right. So a top in the summer of 2020, and that would be the reversal of a 30-year trend, wouldn't it?
Yeah, and I think that trend has really, from the perspective of the bond and notes markets, that trend really peaked in middle of 2016, and these markets have been trading below those highs on a continuous contract basis. And so I think they would work back up towards those, probably forming something on the lines of a double top. And one of the cycles coming into play in the middle of next year is a very consistent 4-year cycle that has unfolded in the interest rate markets for really the last couple decades. And that mid-2016 peak was the last phase of it, and projecting a future top for mid-2020. But there's a lot of other reasons and a lot of other cycles coming into play then as well.
Mm-hmm. Okay, so where are we at with the dollar then? Dollar has kind of been stuck in a trading range, roughly 96, call it, to 98. You think it's going to break 100 again, or where are we at here?
I think that the dollar is confined to a pretty solid trading range for the foreseeable future. I am looking for another wave down in December. We saw an initial sell-off in October from just below 100 to about 97 on the cash dollar index. And then it struggled to rebound over the next month and a half and just kept hitting resistance around 98.40. And I think that there's another leg down in that corrective wave, but that could usher in January or February of next year, usher in a more significant bottom in the dollar, and just more of that trading range. That bottom doesn't necessarily mean that it subsequently enters a new bull market. It just means that that's the lowest point hit for 3 to 6 months looking forward.
So it's not necessarily a long-term trend then that we're looking at, but it certainly peaked. And we know that these trends can go on for years and years before they find their eventual bottom or top.
Yeah, and there's a pretty strong argument that the peak we've just seen in the dollar in late September, early October, that peak could hold for 6 months or longer, and it may even be the formation of an even more significant top than that. I've got a couple indicators that are still kind of in limbo, and I want them to give me a convincing signal before I become convinced that a larger degree turn is unfolding. But if you look at the monthly charts and the longer term trend in the dollar, it really did peak in early 2017. We saw an initial sell-off into early 2018. And then the dollar has spent almost 2 years, but only being able to recover about 2/3 of what it gave up in that 1 year downtrend. So again, this recent high does have some characteristics of what would be considered a B wave or a 2-wave peak, and that meaning very simply it's just a secondary high before a new decline takes hold. So again, those cycles do not contradict what I'm talking about as far as some trends and some bottoms. We could see this sell off into late December, early January. We could see a bottom take hold there and the market rebound, but never get back to the highs it saw in September. And then later on in the year, could be set up for a more significant downtrend. And if and when it ever breaks below somewhere around the 94 to 95 level, I think that's when it starts to be viewed as more of a significant breakdown. And that's something that would impact things like precious metals, other currencies, potentially even interest rates and stock market if it followed through to the downside from there.
Right. Well, its main competition, if you will, is the euro. And we know that has been in a world of hurt and has been really on the down for years now. So let's move on to oil. Oil has kind of been also trading in a kind of directionless cycle, kind of to the downside, a little bit to the downside, but it's basically been in a sideways channel and just hasn't really done much.
FSN Radio. It's all about what's next.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
The Financial Survival Network. It's all about what's next.
Yeah, two of my primary indicators are telling me to still look for a retest of, one of them signals a retest of the August lows, which are around $50 a barrel, and the other tells me to look for a retest of the late 2018 lows, which is around $46 a barrel in the contract that I'm watching. But those particular indicators don't have a specific time component to them, so really have to rely on other things to show me what to expect in the interim. And I've been looking at 58.50 to 59 as being pretty much the make or break resistance in the February crude futures contract that I'm watching. And if they started to break through there, and particularly if they could give a weekly close above 60, then I'd start to shift that viewpoint to a more bullish structure. But until we see that, I still have to rely on these indicators that tell me eventually we're going to work back down towards the lows.
Yeah, so the lows, and what were the lows again? We were in the...
on a 3 to 6 month basis, around $50, and on a 6 to 12 month basis, $46. Now, on a continuous contract, that's going to be a bit lower than that, but they're the levels on the close to the front contract of crude that I'm watching.
Yeah,
currently it's trading around 58.50.
Interestingly enough, we saw today, I think it was Chevron wrote off $10 billion of assets because there's so much crude in the world. But obviously, that could change in a moment's notice. We could see a repeat of Saudi Arabia. We could see a war break out in the Middle East, even though the U.S. is now a net exporter of petroleum products. Nonetheless, the future is always uncertain, and anything that affects the global market has to affect the U.S. market for sure. So it could be interesting, but it looks like it's a multi-year trend taking place, doesn't it?
Yeah, I would definitely agree with that. And right now you've kind of got the more bullish fundamentals in the market that you have Iran's oil somewhat offline. You have OPEC trying to cut export and cut production, and that again has only pushed it up to that $58.50, $59 resistance. So, what's to say if something negative hits the market? If it's tried to hold up and hold up and hold up, and it's had relatively positive news underneath it, you've always got the risk starts to turn more to the unexpected, which in this case would be a little bit more to the downside. Even when we were talking about the dollar, one of the things there is you've had, as you pointed out, yours had all these struggles, European economy not showing near what the U.S. is. But on all that bullish news, the dollar has only been able to recover about 2/3 of what it lost in 2017. So there's kind of a contrarian viewpoint to that, too. If that's all it could recover on that much bullish news, one of two things: either how much additional bullish news would it take to drive it higher, or what happens if even one or two of those things start to neutralize. They don't even have to turn bearish. If some of those fundamentals just start to level out, then traders shift their viewpoint, shift it on a dime.
Mm-hmm. Interesting. And finally, we'd be remiss if we didn't talk about precious metals, particularly gold. Where are we heading there? Are we going to have this first quarter rally like we usually do?
I kind of look at it in the context of two important peaks. One that has already transpired and one that I'm expecting in 2020. And they're linked to just an uncanny web of weekly cycles that I've discussed before. And the last one came into play in late August, early September. And at the time, that was expected to be a 3 to 6 month peak. And the next one comes into play in March of 2020. So I expect another important top at that time. As is often the case with precious metals, often the majority of the move comes in the final weeks of a cycle like that. So in that context, the majority of a rally could wait until February to really take hold. There, in between those two cycles, there was the midpoint of that cycle and a recurrence of a 13 to 14 week, a 7 week, and the midpoint of a 28 week cycle that has governed gold came into play in the opening days of December, and we saw gold and silver rally into that time frame and then turn right back down. So they seem to be certainly stuck in a range here with the potential for another spike low before they really get anything going to the upside.
Mm-hmm. So, but you do think 2020, we're going to see some movement on the upside, huh?
I think there's going to be a couple of decent rallies there, but they'll probably be separated by even larger periods of sideways to down action. So it's one of those things of either just holding and waiting or being very in tune to some of these indicators, some of these cycles that have been so accurate in gold and the precious metals over the last couple of years.
So no end of the year rally, huh?
I actually, particularly with the gold silver index, the XAU, which has been in a little bit more bullish structure than the actual metal. And so I have been more bullish on that index. My weekly trend indicator shows me that should get back up to its early September high around 102, and that it could see the latest phase of a rebound between December 10th, when daily cycles were arguing for a low, and December 20th to the 24th when a high is more likely. So that could give a bit of a 1 to 2 week rally in there, but I, at this point, don't see it getting much beyond where it had peaked in early September. So I guess what I'm trying to say is I'm defining that late year rally. Yes, we could see some upside this week and next, but I don't know that it's going to be that significant, and also might not be seen or felt as much in the actual metal as it is the XAU index. So in that context, I think we'll see a small rally here, but you're still in a broader congestion with gold and silver arguing for a spike to new pullback lows before they mount a more convincing advance. All
right. Well, interesting times ahead, and I guess we're just going to have to see what the markets have to say. But we always appreciate your viewpoint here, Eric. Just tell us the other websites, best place to find you.
Best place is to go through our main website, InsideTrackTrading.com, with the extra I in the middle, INSIIDE, TrackTrading.com. You can also find a lot of our archived publications and articles and reports, any that pertain to the 40-year cycle at 40yearcycle.com. That's 40yearcycle.com.
All right. And as always, there'll be a link. So Inside Track Trading with 2i's.com. And we'll have a link in the show notes to this website. What do you think is going to happen with these markets? Tell us your opinion. We want to know. The email address is kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network, and of course, our main website, financialsurvivalnetwork.com. And you should definitely sign up for our newsletter. Eric, always appreciate your coming on. Best of health and happiness to you for the holidays and for the coming year. And we'll probably talk to you next year.
Thank you, Kerry, and same to you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.